Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor in Singapore. Hi, David. Great to have you on the show.
Hello, good afternoon to you. It's raining here in Singapore. I don't know what your weather is like in Malaysia.
Weather is pretty gloomy, but okay. But the thing is, we've been having bouts of really hot afternoons, and then after that, it starts pouring down as well.
Oh, same here. Same here. It's extraordinary. I think they call it the change in the weather, isn't it? Global warming.
I don't know about the change in the weather, but the weather is changing across markets today because, except on the crypto markets, because Bitcoin is at 45,605. It's had its run, but it's only up 0.29%. Ethereum is at 3,164.71. It's up 2.07%. Now, if we look across the region, David, we've got the SGX Straits Times Index, which is at 3,185.66. It's down 0.68%. Bursa Malaysia is the FBM KLCI is at 1,504.11. It's up 0.49%. But across the region, it's a sea of green. The Nikkei is up slightly 0.5% to 28,028.45. Shanghai Composite is at 3,539.48. It's up 0.27%. Hang Seng is at 26,661.04. It's up 0.21%. Rounding up the numbers, we've got the ASX 200, which is at 7,588.2. It's up 0.34%. David, what's your view on markets across the region this morning?
I think everybody is just waiting for the US inflation data, which will be coming out. And everybody, well, not everybody, but a lot of investors are very mindful of the fact that if inflation is too high in America, they're looking for a number around about sort of 5.3, maybe 5.4%. If it's significantly higher than that, then maybe Jay Powell and the Fed will have to act a little bit more swiftly to try and bring inflation down. But if the numbers are fairly muted, or if they are where they are at the moment, then I think Jay Powell doesn't really need to rush with his tapering, doesn't need to rush with his monetary tightening, and the stock market will just go back to where it was before, which is gradually moving higher. But for now, people are just waiting for those inflation numbers, Brian.
Now, let's look closer to home. Singapore has raised its 2021 economic growth forecast. So originally forecasts were about 4 to 6%. Now it's basically 4 to 5% earlier. Now it's 6 to 7%. Now this is obviously because I think Singapore is opening up. Vaccination-wise, it's one of the highest in the world at about 72%. What's your take on this? And is this the bellwether for the rest of the region?
Well, the thing is, Brian, I mean, I go back to my economics days, and just to make it as simple as possible, there are only 4 ways in which an economy can grow. The first one is consumer spending. That's you and I going out and spending whatever we have on things that we want to buy. So consumer spending is a very big driver. Another one is private sector spending. That is companies putting investments in. The third one is government spending. And the fourth one is net exports. So there are only 4 ways in which an economy can grow. Yeah. So the Singapore government is upgrading its growth forecast. It probably means that, number one, they expect the consumers to start going out and spending a bit more money once this heightened alert that we have had in place for a few weeks. Now that that has already been relaxed, it means that people can start going out and spending money not just on food, but probably a bit of shopping as well. It'll give companies a bit more confidence about investing in their businesses, and the government is already spending money. And so the final one is net exports. So when all 4 of those pistons are firing at the same time, then you would expect the economy to start growing. But if any one of those, then it starts to be a drag on the economy. So I'm not entirely surprised that the Singapore government has upgraded, and I think the main driver will be me going out spending money, Brian.
Absolutely. I think Singapore is probably an isolated case in ASEAN, because the COVID situation in ASEAN, especially with the Delta variant, has basically resulted in most of the economies hunkering down rather than opening up. even though in countries like Malaysia, you have vaccinations which are going at a very good pace. In Malaysia, basically, by the end of this month, the Klang Valley, which is the bulk of the population, 7 million, will be vaccinated. And the government says that in terms of adults, or 80% of the population would be vaccinated by end of October. So, I mean, those are signs, but you have Indonesia, you have Thailand, you have Philippines, which are far down that track.
And Vietnam, of course. And you raise a very, very important point, which is that we need to roll out the vaccines as quickly as possible. The sooner you can do that, the sooner you can start having some confidence in reopening your economy. The UK is a classic example. They rolled out their vaccines as quickly as they can, and they are able to have that degree of confidence that they can reopen, because they know that, sure, there are still going to be infections, but the people who are vaccinated who do get infected by the virus are less likely to be severely ill. You may have a bad headache, you may have a bit of a fever, but it is not going to be life-threatening for a lot of people. So vaccinations is key. And the sooner you can vaccinate as many people in your country, the sooner you can start thinking about reopening and then rejoining Singapore in upgrading your growth forecast for the year.
Now, you're speaking of upgrading of growth forecast. The conversation globally among stock market analysts and investors and so forth really now centers around the question of, David, has the market actually peaked?
Right, okay.
And what are your thoughts on this?
Look, the market always likes to worry about something. If it's not whether the market has peaked, previously it was COVID-19. So the market always has something to worry about. And it is that worry that in some ways drives the market higher. Because let's put it this way. Let's say, for instance, that you are one of those people who are quite skeptical that the market has peaked. So you've been convinced that the market has nowhere to go. I, on the other hand, don't believe that, and I want to carry on buying. It'll go up, and eventually you will be one of those people who will become convinced that the market still can go higher. So as long as there's a preponderance of people who are skeptical, then it means that the market can continue to go higher. The moment everybody believes that the market has peaked, then the market has peaked, because there are no further buyers out there. And a lot of people will look back on this time last year and say, oh, the market's gone up a lot since last year. Sure it has, yeah, because we're in a recovery mode. But climbing the wall of worry really is the clue. The moment everybody believes and nobody for 1 minute is able to go into the market and buy again, then you know the market has peaked. And I don't think we're at that stage yet.
Okay, that's interesting, because that's a very good insight into investor psychology. But one of the things that, and perhaps in favor of the fact that markets haven't peaked, is the fact that for many of these companies, the earnings are still really, really good.
Quite right. And we have to go back to Benjamin Graham, who says that in the short term, the market is a voting machine. In the long term, it is a weighing machine. And the things you should be weighing are earnings, or in my case, an income investor, the dividends. And that is what I should be weighing. And I have no doubt whatsoever that the companies I invest in, most of the companies, if not virtually all the companies I invest in, will be delivering higher dividends in 10 years' time than they are today. And it is that which drives me into the market to buy increasingly more shares, because I need the income. And I believe that these companies are able to raise their dividends over time. And so I don't really have that much worry. Share price is probably the worst thing to look at when you want to determine whether or not you've invested in the right companies, because share prices are so fickle. 1 minute it can be high, the next minute it can be low. It doesn't mean that the company has suddenly gone from a fantastic company to a dreadful company. So share prices is not what you should be looking at, but instead what you said, earnings, is something you should be following. And in my case, a share of those earnings, which is the dividends. And as long as you follow that, I don't think you will go too far wrong.
Now, David, thank you very much as always for your sagely advice.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, the founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please like and subscribe to our various platforms and check out our website, www.biztech.asia. Thanks for tuning in.